These two things completely changed my entire trading journey, and I wish I knew these two things sooner so I could become much quicker and profitable than instead of wasting all my time. Like many other retail traders, probably including you as well, watch this video, still trying to become consistently profitable. So let's get straight into these two reasons. Well, these two things actually is just backtesting and journaling. You should be spending majority of your time trading as a trader, backtesting and journaling. Now, there's two different kinds of things for these two things. You guys should take into consideration. The first one is obviously when you are backtesting, you want to be keeping track of screenshots in each one of your trades and then putting them into a journal. All right, you can either use my ETU private trading journal you guys get within the course for free, or make it completely your own, which is completely okay. Some people prefer using Notion, some people prefer using Excel, some people prefer using, I don't know, Google Spreadsheet. Use whatever is comfortable with you that you're familiar with. It doesn't really matter, to be honest. Just make sure you have a journal where you have a few columns of what pair you're trading, what session, within or outside kill zone. In my opinion, is something I also tracked. Obviously, buy or sell. You can be optional with that, honestly, because you will have a column where you will attach screenshots actually of the exact trade you took. And it's, of course, have a column for miscellaneous stuff like comments on your trades and other things you should take note of or that you notice from a technical perspective. Do not be journaling your emotions whenever you're journaling your backtested trades, because your backtested trades should not even involve emotions in the first place. The reason and purpose of backtesting is so that you can prove to yourself that what you're trading, your strategy, aka your edge, actually proves to be working over a long run. There's a lot of strategies out there, guys, on YouTube. A lot of strategies that work for only a month, only work for 2 weeks, only work for a few days. This is why some people pass accounts a lot but can never get to a payout. And think about it this way: the payout window a lot of times for a lot of prop firms is 5 days to 1 to 2 weeks. Okay, and there's unprofitable strategies that can work and have these runs and simulations of being profitable for 5 days or 1 to 2 weeks, but then they ultimately fail at the end. Hence why so many traders can get maybe funded, get payouts potentially, which is even smaller percent. But the ones that are able to consistently get payouts without blowing their accounts is extremely rare. Now, there's are certain strategies you can use, I would say, for prop firms, where you do forcefully blow the account, but I'm not gonna dig into that because that's not the point of today's video. If you want to learn more about that, you can probably figure it out from my YouTube live streams. I believe I've talked about it maybe once. I'm not too entirely sure. But yeah, anyway, if you want to ask me, feel free to. But it's not really that deep. It's mainly for certain specific prop firms. Nonetheless, once you have done your backtesting, I recommend do at least 100 to 1,000 trades. That is a big range, guys. I think 100 trades is not enough. Ideally, you do 500, but 100 is a good baseline. Is the reason why I say 100 at least. 50 is not enough. 100 is a good baseline, and you just build up from there. You collect enough data. I'd say after 1,000, it's not really that important in terms of sample size because at 1,000 trades, one loss or winner is going to affect your win rate by only 0.1%. It's such a mere insignificance to your overall win rate that it doesn't matter that much. But if you're only taking 10, 20, 30, 40, 50 trades, each win or loss can affect your win rate significantly, 10%, 5%, 2%. So make sure you have enough sample size when you backtest. Now, once you have your backtest data and you see it's green, go on my website, essentialtradersuniversity.com. Go under a section called EV Calculator. It's completely free. Input your win rate and your risk reward. All right. Once you input your win rate and your risk reward average, look at that EV value gets printed out. Again, you don't need to do any math or any rocket science. I have it fully built for you guys. All right. So you don't have to do any calculations yourself. It auto does a calculation for you and it prints out EV. I recommend trade systems that are above 0.40 EV or greater because that's equivalent to having a 70% win rate out of 1-to-1 ratio, which is pretty solid. With high frequency, that can make you a lot of money. All right. Again, also depends on what type of environments you're trading, pairs. But anyway, once you've done that and you've proven it's a good EV that's positive, then that's when you move on to phase two, where you actually start live trading. When you start live trading this strategy, again, emotions play a role now. So in your new journal, okay, you're gonna have two separate journals. You're gonna have journal number one, which is including your backtesting data and doing research on that. That's all technicals, by the way. No emotions or anything in that. And then your journal number two is gonna be your live trading journal. Whether you're trading a fund account, maybe you're trading a challenge account, a personal account. I don't care what account you're trading with. type of style of trading you're doing. Point is, have two separate journals so you can see the difference between the two data points. They should match pretty similar. All right, your win rate and average reward over a long period of trades. Let's say you back tested 500 trades, and let's say you took 500 trades live is going to take a while. Let's say you take 100 trades, and your win rate, you should make sure that your win rate and risk reward average is close enough, in a ballpark range of, I'd say, probably 5 to 10% difference in win rate. 10% is pretty significant in win rate, so I'd say it should be within at least 5%, plus or minus range for a win rate of your live trading versus your back tested data. And for your risk reward, that can vary a lot depending on what asset you trade. So I can't say too much about that, but for win rate, make sure it's within that deviation. And now, the fun part. So in your live trading journal, for the comment section, instead of having technical stuff in there, leave that section for emotions. You've already done all the technical analysis, all the learning about technicals. There's only so much in terms of technicals that you can truly learn as a day trader. Telling you guys this ahead of time because I used to strive for perfectionism. I used to try my best to perfect everything, and I realized, at some point, there's only so much you can learn before the rest is just execution, and execution fully depends on your mindset and how well you can be handle your emotions and your mental capacity. Some people have a better mental capacity. That's something I do believe you can train over time and develop as a trader. So make sure you keep practicing good habits on the charts. All right, be patient, wait for your setups. Don't obviously mess up your risk management. Keep it very consistent. I always risk basically the same percent for my trades. I recommend you do that too, whether in drawdown or in profit. Let me turn off the light here. Actually, lighting might be better. I'm not too sure. But just keep everything very, very consistent. Risk management is consistent, psychology consistent, strategy consistent. Don't change your strategy. Once you have done all that work from backtesting and you have the data in front of you, psychology should be much easier because now you're very confident in training that system and being patient. Now you know that whenever you take random trades, it's going to lead to tilt and all these other behaviors that will make you lose money. So another thing, gem. I'm not going to drop too many gems in this video because this is a free video for the YouTube. I don't want to share everything, but you want to have also when it comes to journaling your live trades that you take on your fund account, personal account, aside from journaling your emotions in the comment section, also have a section where you talk about what strategy you used or what entry model. And you have a section, which is what I did also, called R. Now R stands for random, all right, for me. And what it means, or you can even call it T for tilt. Whatever you want. You can just even write out tilt. Tilt is very shorter, but sounds probably better than R. So just write out tilt and keep track of your tilt trades data. Now you may ask, Jay, why do you want to keep track of your win rate and risk reward of tilt trades? Those aren't even part of your trade system. What's the point? Well, remember, we're tracking your live trading stats now in the live trading journal. We're not tracking your backtesting data. In your backtesting data, there should be no such thing as a tilt trade. That's not a thing in backtesting. There's no emotions in backtesting involved, or there shouldn't be. If you are having emotions in your backtesting, please just get rid of them because you can go back in time, replay, or you can also just speed up candles. You don't have to sit there for 40 minutes watching your trade. Please don't do that in backtesting. All right, play it out. Let your candles go back and replay fast, so emotions aren't really an issue there. Your point of backtesting is to prove that you have an edge without emotions. Now, once you do have that edge without emotions, then add into your emotions, because when you live trade, there's going to be emotions. And that's when you see, okay, if I can handle my emotions well, my data should match from my live trading journal and my backtesting journal. And once you keep track of these tilt trades, you do notice it re-emphasizes and reinforces into your brain here. And it's helped me a lot, by the way, that these random trades I'm taking, like lottery trades, or I wouldn't call them lottery trades, but these gamble trades, is a better word. They're making me lose money. And they have a section with your account balance and how much money you're losing, not just risk reward, but money you're losing. And then you'll see from all those tilt trades, you can probably see you might take a lot more than you think. A lot of people lack self-awareness, which is a huge thing also in trading. And so when it comes to psychology of that, if you're not self-aware in the moment or in the present moment, it's going to mess up your trading because you're not even going to realize you're making these mistakes. You might think it's a strategy issue again, when in reality you already proved to yourself that your strategy is powerful and it's green over a long run. It's your emotions holding you back. So this is how you distinguish as a trader very quickly early on. I wish I had all this information. I'm telling you guys now, but no one ever told me this online. I had to figure this out by myself because people were spreading a lot of, let's just say, things that didn't make sense to me later on. In the beginning, I used to believe them. I used to believe, psychology, until I ran into the true issue, which was I didn't fully understand my trading strategy and my data. If I don't understand that fully, my psychology is going to be very hard to improve naturally. Um, so once you're able to split up these two data points, then you know clearly what the issue is. That was a big problem in my trading journey a few months in. I was confused whether or not I was gambling or trading. Okay. And even if I was trading, I was confused if I was not winning money or not making money because of my psychology or because of my trading strategy. Maybe there is no edge in the market, right? These are questions I wish I asked myself earlier, but I couldn't put the pieces together and figure out how to answer those questions. And so now I'm giving you guys the answers ahead of time right now so you guys can apply this today and become profitable much quicker. With all this information on my YouTube channel, you should be able to become profitable. If you want more help, one-on-one help, I do have the mentorship program. It is currently closed. All right, I do open spots on a very limited basis. Usually, depending on student performance, that's when I will open up 1 or 2 spots. But it's very, very selective, very limited group of students I do mentorship with because I keep my time precious as well as your time. So hope you guys do enjoy today's video, man. If you guys did take a lot of value out of today's video, leave a like, comment down below what type of psychology or sit down talk videos like these, not just like charts. I do want to do a lot of trade recaps, charts. So you guys do enjoy those, but also a few of these once in a while. I'll check in with you guys. I used to do live streams. I still do, but just not as common. Anyway, guys want to check out more of my information, go to centraltradersuniversity.com and also join the free Discord server, guys. We're trying to hit 1,000 Discord members currently, and once you do hit 1,000, there's going to be a special giveaway, and giveaway is super easy to enter. All right, so looking forward to seeing all you guys progress in your trading journey, and I wish you all the best of luck. Peace.